Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. What I want to address today is the climate of fear, and we've more or less addressed this in some of our alerts recently. But there really appears to be a climate of fear with investors. A lot of people are very concerned about the possibility of a major correction. People are worried about taxes. Of course, that's not really a concern for MLPs. But people are certainly worried about the impact of that, more regulation, the major oil spill off the coast of the Gulf Coast, which looks like it's going to be one of the most devastating in history, if not the most devastating. Other people are worried about the sovereign debt crisis. And so what we've seen, again, is something of a resumption of what we've seen many times over the past couple of years, and that is anytime people get worried about the economy, about a double-dip recession, they scurry into Treasury bonds, U.S. Treasury paper, and basically sell everything else off. Now, in late 2008, this really went to a great extreme, and we had many of our MLPs get down to very, very low prices. Enterprise Products Partners, for example, never in trouble, always increasing the distribution, got down to a low of around $17 during the height of the crisis. People didn't want to hold anything really except what was absolutely the most risk-free paper out there. I don't see us going to that extreme, but I think we can really take a lesson from that in that, we went through this massive crisis, but the only big losers from it were those who sold out somewhere along the way, those who threw in the towel, those who capitulated. If you held on to Enterprise, sure, you had some uncomfortable moments. You're still getting those you still got those dividends all the way, though, and they kept increasing them. And then, within a year, you're back up to where you were, and in fact, on the way to new all-time highs in that MLP. And the same has been true all across the board. So even if we do hit another 2008 patch, I think is very unlikely. I think one reason that market calamities hit so hard is because everybody's leaning in the other direction. But even assume we do get something like that, the good MLPs, the good businesses, weathered the storm and, again, continued increasing dividends and came out of it on the other end. Were you better off selling before the whole thing occurred, or were you better off holding on through? You're actually better off holding on through. If you'd sold before the thing occurred and avoided the up and down, maybe you would have felt good about it in some way, but you would have missed out on a lot of income because, let's face it, what are the alternatives? What are the cash alternatives to these high-yielding stocks? Not much. So you would have crimped your lifestyle, maybe gotten some bragging rights, maybe you would have bought in at the bottom. But the people who held on all the way through got a rising income stream and were made whole at the end, and in fact got into better shape. So let's keep that in mind as we go through some of these ups and downs in the market, and particularly as it pertains to stop losses. One reason that Enterprise this week might have hit a low of 29 and then rebounded back to 34 range within the course of an hour or two might have been faulty stop losses. A lot of people put in stop losses very close to the prices of these things, think they're limiting their risk, but really all they're getting is an automatic sell order if a price is breached. So this morning pretty much everything ended down. But I think what we very likely saw were a lot of stop losses on Enterprise executed. And when you put in a stop loss, you don't get the price that you put it in necessarily, unless it's a very calm market. Rather, what happens is a lot of sell orders hit the market at the same time, particularly if everybody's leaning in that direction, and the price goes way down, and you get taken out, usually at a very, very bad price. So watch it with the stops. Stick with the good companies. We just had a very nice raft of first quarter earnings. We're in the process of reporting those to you, as well as the impact on distributions. And the news looks good. The things are looking up for these businesses. They're financing at very low rates, as we pointed out. The Enterprise deal that they did announce today, before the big decline in the shares and then the big snapback, very, very positive. They're increasing their fee income, increasing their future cash flows, increasing their distributions afterwards, and it's all a very bullish situation. So again, the way you lose in the situation is by trying to play it a little too cute or putting those stop losses in too tightly. Let's just stick with good companies. Let's not buy them above our buy targets. And let's hang in there on these panic-stricken days as long as they are good businesses, they're going to do us right. So that's all I have to say today. Thanks for tuning in.